Hello everyone, this is Danish. Today we are going to talk about where I'm seeing the market is heading moving forward from here as I see some of the flashing signs, uh, especially in S&P 500 and Dow Jones and Nasdaq. VIX is also popping up. So few things that you have to watch for when you as an investor, you're looking in the market on day-to-day basis, how to take advantage of different situations. So if the market turns bearish or show a sign of reversal, how can you? What are the few measures that one should take to prevent him or herself to get hit hard on his portfolio rather than take advantage of the situation and make more. So few of the signs that you have to see, and you have to put in your perspective every time when you're looking at the market. As an investor, I keep those things. They are not 100% accurate. There are things that other things that you also have to measure. But as an initial start, I think these are the things that I look into as an initial step, and then of course you have to have a confirmation as well to make sure that you are in the right direction. Anyways, let's jump right in. So what I'm gonna do is that I would go to trading view where I would put in a SPX index and I have my moving average set to 20 and see if it's where it is heading. So currently I have it on weekly basis. So I'm just going to turn right back to the daily chart and see how the chart is showing me on the daily perspective. So as you can see here that S&P 500 was actually respecting throughout November till now the 20 moving average on daily chart, and every time it was coming right down here it was going back up again and coming right down and going back again. So it's kind of a breather, a small breather when the market is going heavy. It respects 20 moving average on day-to-day basis. And we saw that sign throughout here. Once it broke above from here, we saw that the market turned bullish and it was continue to go. It has not turned bearish. What are the things that you have to look up when you are seeing those signs? Generally, you want to see that S&P, for any stock or S&P 500 or any market, you want to see 20 or 21 moving average, whichever you feel comfortable with. The market should not close below it for next 2 to 3 days if you are looking on a daily basis. Generally, if it's 2 days, is actually a sign that the market has a higher possibility to turn bearish, and if it does it for 3 days, it actually have bigger chances. So if you see here, 2 3 days when it happens, the market goes down significantly, and once it's turned back up and it stays above 2 days 3 days, then it's continued to move up. As you can see that it hit here down one day, but second day it closes above. So these are the confirmation that you have to look back in. This is the only time when it went down 2 days and then moved back up again here as well. So you want to see with the support, and those are the few things as well. So we're going to talk about right here. So what I'm seeing here, it closed one day yesterday below 20 moving average. Today it also closed below, though it was a green candle, but it closed below 20 moving average, which is which gives us a sign of higher possibility or probability for market to be turning bearish from here in a short term. I'm not saying it's going to be like this break, probably 5 to 7% or more from here. So maybe I'm seeing that the S&P 500 might go up to 3600. What I'm seeing also is that 100 moving average is also coming up here. So I see that probably another possibility that it comes right here. What another thing that you want to look up is the Fibonacci. Um, So if you look up the Fibonacci retracement, what you do is that from the previous, was recent bottom to previous peak and see where it is going, and then you generally see that 50 between 50 to 0.328 is probably a sign where you can see that the market might be turning down. So we saw one drop here up to 0.23 and it reversed back, but it was not confirmed. If we move back higher tomorrow, then we're fine. We'll probably be doing good. But if he closes below again the 20 moving average, then it's sign for us to, probably the market is going down. And as you can see that, this 35.52 and 36.28, I think somewhere between here the market will be trending for a few weeks or so. If it goes down, that would be probably a very good time to take positions in a stock market. If you are buying, if I'm buying a S&P 500 index, or to get into some of the stocks that I already bought in and that I'm looking up, especially, I'll talk about our stock that I'm looking up in future, to get in. So that's one way. What are the things that you want to make sure that, if the market is turning down? So you would go to dollar index and see where the dollar index is moving. You can see, I have put it into my chart for last 2 months, 3 months, to see how it is going. So right now I'm seeing that if you look up the weekly chart, so previous bottom was right here, and then that's where it's finding support right now. And I'm also seeing that the MACD is reversing as well. So I think it's probably, if we turn green here and then break above this line, we might be heading, the dollar index might be heading upward, which is a sign again, what it means is that the people are selling out their position and getting into dollar. So that's what one other sign of that. So, and the VIX is going up as well. So we have another sign for it. So how we can take advantage of such situation? So what I would be doing tomorrow, I will check and see what the VIX is, where the VIX is, and where the S&P 500 and some other indexes like NASDAQ and all that sort of good stuff, to see how they are moving. If they are moving higher, I probably will check the VIX again to see if it's shifting or if it's continue to go down sideways. If it stays sideways, then I'm probably fine. Market will still come down. But if it's starting to pick back up again, then I'll probably take a position in VIX to hedge myself against the market. So hedging is another very important tool that you can use. What it does is that if you put your 10% of your cash into hedging, it can actually give you a benefit of your portfolio not being hit so hard. If the S&P has been hit like 10%, and your portfolio might be hit only 8 or 10% and not more, because you are in more stocks. If S&P or any other index or if the stock market has been hit 10%, generally your portfolio will be hit higher. And if it goes higher, then your portfolio will go in higher as well if you're picking up good stocks. So this is how one can hedge getting into the market. And then once you see that the reversal of bearish, like a bullish reversal signs are coming up, that's when you can sell your VIX. Just like how people bought in here and then they sold it right here, and then bought in here and then sold it right here, and get back into the good stocks that they wanted to buy in. So this is how you can do it. Well, take it as a grain of salt. If you are very new, I would not recommend to get into VIX, because this is very volatile and it can sweat you a lot. So it's not for everyone. It's for the investors who can really bear the volatility on this one too when they're hedging. And there are other ways too. I think that for this video, I think it's enough. I think it is a good start to know where what are the tools that can be used. What other things that we are looking right now as per the market and how expensive the market is. So if you look up, Schiller PE is a very good, it's being used by many investors to see if the market is heavily expensive right now. And as you can see that the last 2 times, when the market was higher than this was in a Black Tuesday in 1930. And now it is like this here, when even though the economy is not doing so well, S&P 500 is really expensive, or Dow Jones, whichever you feel comfortable with. And the other time it was higher was a .com bubble. So this is really a scary sign, but even then I don't get out of the market. I keep myself at least 70%, 65 to 70% in the market, to make sure that I'm utilizing the gains. If my stocks are good, as I always preach, that's how I keep myself. If I'm buying a great companies, regardless where the S&P is going or the market is crashing, they're going to come back up in 6 to 8 months. So I don't have to worry about it if the S&P 500 or any stock market is crashing 20%, 25%, because I know my stock's gonna go down, but they're going to come back up. So the poor companies, the bad companies, people are gonna selling out there, and they're going to get into the stocks that are really good and working. So we'll talk about what are those stocks in future. Anyways, for today, I think a few other things. Another is that S&P 500 P ratio. You can also see it. It was higher, like in that time, and then 2008 finance recession. So you want to make sure that you are aware of that, what the situation is. I'm not, this is just for knowledge purpose. This is just my opinion. We will come to know tomorrow where the market is heading. It may be just a tricky situation that it was a play out for people to just sell their positions and get out of the market, and then market would continue to move up. We want to make sure that we have a confirmation for that before we make a decision. So if market 1 or 2 drops 1 or 2%, that does not mean market will crash. But you just want I want to make sure that you are aware of what are the few tools that you can use, to be aware of where the market is heading. All right. Anyways, thank you very much for your time and watching my videos. I really appreciate it. Please like and subscribe and share with your friends and family members, and give a comments what things that I miss, what things that you like and you don't like. I really appreciate your comments under the comment section. Thank you very much. Bye bye.